Welcome back everyone. We have looked at the common business industries. Now let's look at the transactions or business processes that commonly occur in a business. The primary function of accounting is to record transactions. Only if we know what are the business processes or transactions that happen in a business, then we can properly and correctly record the transactions. Okay, now let's see what are the transactions that occur in a business by starting a business itself. Let's assume that we are going to open a furniture manufacturing business. Firstly, let's give our business a name. Casanova Furniture Private Limited. That is our business. This is a private limited company. All the required registrations and license should be taken first. Let's say we took all that. Next, what do you need to start a business? Cash, right? Okay, we took an estimate and arrived at a total of 20 lakhs rupees which we need to start our business. So, I invested this 20 lakhs rupees into the business to start the business. This investment made by the owner of the business is called capital. Now, can we invest only cash as capital? No, right? We can also invest goods, assets, etc. as capital. Now, our business needs an office or factory space. We can either take a building space on rent or we can buy a land and building and start the business in our own building. I have my own land and building and decided to invest this also into the business. So, we are going to start a business in our own building. We give this building to the business. The value of this building is rupees 10 lakhs. Okay, now let's assume that we have already made some new furniture in our house. Isn't our business furniture manufacturing business? Hence, for our furniture manufacturing business, furnitures are goods that are traded for business purpose. So, we invest 2 lakhs rupees worth of goods in the business. Now, the total capital invested in cash, assets and goods is 20 lakhs plus 10 lakhs plus 2 lakhs, that is equal to 32 lakhs rupees. Capital is the first step in starting any business. Hence, the first transaction in accounting also for any business is the journal entry of bringing in capital. Okay, we had invested 20 lakhs as cash in the business. Now, can we just keep this 20 lakhs rupees investment as cash in the office? Not safe, right? Not only that, there are limitations to the amount we can keep as cash in our business. And also, our income tax department says payments for cash expenses up to rupees 10,000 per day to per person is only allowed. Payments more than 10,000 should be done through the bank only. So, it is vital that we open a current account with any bank. Can we open an account in the name of the owner of the business? No, because in accounting we should consider the owner and business as two separate persons. Our business is a private limited company. In case of a company, we have separate legal entity status. Business transactions and personal transactions of the owner should be separate. So, we can use this account for all business needs. All bank transactions should be properly recorded in our accounting books and should be reconciled on a daily, weekly or monthly basis. We should ensure that all these bank transactions have been properly recorded. Now next, for a business, what do we need? Can we start the production? We need some assets like machineries, equipment, furniture, computers, etc. Also, some raw materials and all other consumables needed for production should be purchased. Purchases are of two types, cash purchases and credit purchases. If it is a cash purchase, then we need to settle the payment at the point of transaction itself through cash, check or bank transfer. In case of credit purchase, then the settlement can be made on a later date according to the credit period given by the supplier to us. All types of cash and credit purchase of furniture, raw materials should be properly recorded in the books of accounts. We will receive a purchase bill for the purchase from the supplier. Based on this purchase bill only should we record the transactions in accounts. All these invoices and bills should be kept safely for future reference and during the time of audit also. Now, we have purchased our fixed assets, land and building, raw materials, etc. Now we can start our production process. Now, during the production process, We will incur certain expenses like wages for workers, salary for employees, rent of the building, traveling expenses, electricity charges, water charges, administrative expenses, selling and distribution expenses, etc. We also have to make the payment for these expenses. We can do it by online transfer, that is NEFT, RTGS, check payment or cash payment, etc. All the payments that we made needs to be recorded in our books of accounts. These transactions should be recorded only on the basis of payment bill or payment voucher. These bills or vouchers also need to be kept safely for future reference. After these expenses are settled, we may experience some shortage of funds. Now, what are the options for fundraising? The first option may be a bank loan. We can take a term loan from a bank or we can take overdraft facility from the bank. After approaching various banks and considering different banks, we have decided to take a term loan for 5 years from SBI Bank with 10% interest rate for rupees 5 lakhs. Now, we have also availed an overdraft facility of rupees 5 lakhs from Axis Bank with 12% interest rate. We should correctly record the monthly repayment of principal amount of loan and interest in the accounts. In case of overdraft facility, we have to record only the liability for the amount we have used. For example, if we have used only 2 lakhs, we have to record that and also the interest for this 2 lakhs only. Our production process is going on. Some of our furnitures are made and sold. Sales are also of 2 types, that is cash sales and credit sales. In case of cash sales, our customers will pay at the point of sale itself. Now, in case of credit sales, we will give our customers some credit period and they will pay at a future date. All the cash sales and credit sales should be properly recorded in our books of accounts. In case of credit sales, when we receive the payment, then those receipts should be properly recorded in our books of accounts. All these sales should be supported by sales invoices and receipt vouchers. All these sales invoices and receipt vouchers should be kept safely for future reference. After the sale of products, is our business process complete? No. Don't we need to check what is the result of all this hard work we did in our business? Whether our business is running in profit or are we incurring losses? What is the current financial position of our business? What are our assets? How much liabilities do we owe to others? For this, we have to correctly record the transactions, prepare our financial statements and reports. Okay, after preparing the profit and loss account, balance sheet, etc., we come to know that we have generated some profits. Wow, that's great. We are happy. But is our government happy? No. If the government needs to get income, we need to pay our taxes. We have Income Tax Act, GST Act, Companies Act, etc. All businesses which have revenue over a limit should take GST registration. So let's assume we have crossed the revenue limit for GST registration. So we take a GST registration and we get a GSTIN number. Then we have to display this GST number on all our sales invoices and purchase bills. As we record the transactions in accounts, we also have to record the GST details in our books of accounts. Using that, we will file our monthly and annual returns and make payments for GST. Next comes income tax. If we have income, then we have to pay income tax. Firstly, we have to take registration with the Income Tax Department using our business PAN card number. Then we have to file our income tax return using the financial statements we have already prepared and then pay our income tax. Now, we know employees are the essence of a business. So, certainly we will have some employees in our business, right? We will have to take Provident Fund and Employee State Insurance registration for our employees. Then we have to deduct the ESI and PF amount from their salary and have to contribute certain amount from the side of the business and pay to the government and file returns. All these processes explained now are the major transactions that happens in our business, which is furniture making business. we have considered a manufacturing business, and these are the major transactions that happen in a manufacturing business. There may be some more transactions, but as a general overview, these are the transactions that happen on a daily basis. We have not gone in depth into any of these transactions, but on a general overview, we should be able to understand these transactions. So, when we go to a company and say we are ready to work as an accountant there, the first thing we have to do is understand what is their business and what are their business processes. What are the present accounting transactions happening there? We have to understand all this, and then we have to record the transactions in a correct and systematic way. So, like this, we record all transactions and prepare the accounts with lots of effort. Now, what is the importance of this? We already discussed this, but let's summarize this once more. First point, day to day there are lots of transactions happening in a business. We should record the important transactions in a systematic way, and accounting helps us in that. Second, there is not only cash transactions happening in our business, we also have credit transactions. In the case of credit transactions, we have to pay our suppliers on a future date, and our customers will pay us on a future date. For this, we'll also have to generate accounts receivable and accounts payable reports, which tell us exactly how much do we have pending to pay to our supplier and how much our customer has pending to pay to us. Third point, we are doing a business for generating profit. Of course, it is not for charity purposes. Hence, accounting is very important to know the net result of our business. Are we generating profit or are we incurring losses? Fourth point, we are investing a lot of money, time and effort for our business. We need to get good returns for this. Or we could also invest as a fixed deposit in any bank, shares in any company, etc. We also get returns there. So when we are doing a business, we need to get good returns for that. In our business, we have to do certain analysis to understand if we are getting good returns for our efforts. This can also be done only if we maintain good accounting records. Fifth point, next we need to understand our financial position, how much is our assets, how much is our liabilities, etc. Good accounting will help us understand this. The sixth point, we have certain tax laws like GST, income tax, Companies Act, etc. We have to file our financial reports to these departments. Good accounting and proper records will help us easily file our financial statements with these departments. So now we know that accounting is very important for any business. We cannot keep accounting aside and continue with our business. It will be like walking in the dark with no knowledge of which direction we are walking to.